Feeling the sting of those healthcare costs? You're not alone. But what if there was another way? The wealthy often use clever, perfectly legal strategies to manage their medical expenses, sometimes paying far less than you might think. It's not about being unfair, but about understanding the system. Today, we'll explore 15 of these strategies together and see how even a little financial savvy can make a big difference in your healthcare journey. Let's dive in. Hey everyone, welcome to Natural Cure's Secret, your go-to guide for healthier, happier you. Subscribe now for expert tips, latest trends, and life-changing wellness hacks. How the rich pay almost nothing for healthcare legally. 1. Using health reimbursement arrangements, HRAs, to cover costs. Many wealthy business owners use HRAs to pay for medical expenses tax-free. HRAs allow employers, even small business owners, to reimburse themselves for qualified healthcare costs. Unlike HSAs, there's no contribution limit, making it a powerful tool for reducing tax burdens. By setting up an HRA, business owners legally shift personal medical costs to their company. This means they avoid income taxes on medical expenses while keeping control over their healthcare spending. 2. Leveraging life insurance for medical expenses. Some wealthy individuals use permanent life insurance as a hidden healthcare fund. Certain policies allow them to borrow against the cash value to cover medical bills, long-term care, or even experimental treatments. The best part? Loans from life insurance policies are tax-free and don't require repayment while they're alive. This strategy provides a safety net for healthcare costs without tapping into retirement savings or liquid assets. 3. Getting employer-sponsored private health insurance. High net worth individuals often negotiate premium health plans as part of their compensation. These executive plans cover services regular insurance doesn't, like high-end specialists, advanced treatments, and private hospitals. Many top-tier companies offer 100% employer-paid premiums, meaning the rich get gold standard healthcare for free. If you work for a company with great benefits, maximizing employer-sponsored plans is a smart move. 4. Hire personal healthcare consultants. Medical bills can be intentionally confusing and overpriced, even for the wealthy. That's why many hire personal healthcare professionals. They review and dispute hospital bills, often reducing costs by 30% or more. Negotiate lower prices for surgeries, treatments, and prescriptions. Coordinate specialist referrals and complex care management. Even insured individuals often overpay for healthcare, so having a dedicated professional audit and negotiate medical expenses can save thousands without any legal loopholes. 5. Establishing a private foundation for healthcare grants. Some wealthy individuals create nonprofit health foundations to fund their own healthcare while benefiting others. By setting up a foundation, they can allocate tax-deductible funds for medical research, treatments, and even personal care if it aligns with the foundation's mission. For example, a wealthy family dealing with a rare disease might fund a charitable health organization that sponsors research, while covering their own medical expenses legally. It's a win-win tax strategy. 6. Writing off medical expenses as business costs. Wealthy entrepreneurs often classify medical expenses as business deductions. This works if the treatments are required to maintain their ability to perform their job. For example, personal trainers or wellness programs to stay in shape for work. Cosmetic procedures if they are needed for their professional image. Alternative treatments like acupuncture or biohacking if they help job performance. By legally reframing health expenses as business costs, the wealthy avoid paying out of pocket. 7. Using captive insurance companies for healthcare coverage. Some high net worth individuals set up captive insurance companies, small private insurance firms that they own and control. Instead of paying premiums to traditional insurers, they pay themselves by funding their captive insurance company. This allows them to deduct premiums as business expenses, keep insurance profits within their own company, also customize coverage to their needs. While this requires capital, it's a powerful tax-saving and cost-controlling strategy. 8. Taking advantage of medical tax deductions and credits. The IRS allows deductions for qualified medical expenses that exceed 7.5% of adjusted gross income, AGI. The wealthy bundle expenses into one tax year to surpass this threshold and maximize deductions. Common deductible medical expenses include dental and vision care, mental health treatments, prescription medications, home health care services. Additionally, some states offer tax credits for long-term care insurance, reducing costs even further. 9. Joining exclusive boutique medical memberships. Ultra-high net worth individuals often skip traditional insurance and pay directly for elite medical memberships. These memberships provide VIP access to doctors, specialists, and even private hospitals. These options usually include private hospital memberships with priority access, genetic and longevity clinics offering cutting-edge treatments, on-call doctors who visit them at home or while traveling. By paying a fixed annual fee, they bypass wait times and get premium care without insurance hassles. 10. Relocating to states with no income tax and lower healthcare costs. Some wealthy individuals move to states with no income tax like Florida, Texas, or Nevada to lower both their tax burden and healthcare costs. Certain states also have cheaper private insurance markets or better Medicaid expansion programs. Even moving internationally can help. Wealthy retirees often establish residency in countries with world-class, affordable healthcare like Portugal or Costa Rica. 11. Investing in medical real estate for passive income and tax breaks. Many wealthy investors buy into medical real estate like hospitals, clinics, and senior care facilities. Not only does this generate passive rental income, but it also provides tax advantages. In some cases, investors get VIP healthcare services or priority treatment at the facilities they own. Plus, depreciation deductions on medical real estate can offset taxable income, making it a double win for both wealth building and healthcare savings. 12. Investing in biotech and pharmaceutical startups for early access. Some high net worth individuals invest in biotech, pharmaceutical, or medical device startups to gain early access to cutting-edge treatments. They fund companies developing breakthrough treatments for diseases they or their family members may face. They often get priority access to new drugs, therapies, or experimental treatments. They benefit from potential investment returns while securing premium healthcare solutions. This strategy allows them to shape the future of healthcare while benefiting from exclusive medical advancements. 13. Setting up international trusts for medical treatment abroad. Wealthy individuals sometimes establish international trusts to fund healthcare in countries with world-class, lower-cost medical care. The trust pays for all medical expenses tax efficiently. It provides access to private hospitals, specialized treatments, and luxury recovery centers. It legally protects healthcare funds from high U.S. taxation and inflation. By structuring healthcare expenses through offshore or international trusts, they ensure long-term medical security at a fraction of U.S. costs. 14. Using charitable remainder trusts, CRTs, for medical funding. Wealthy individuals often set up charitable remainder trusts, CRTs, which allow them to donate assets to a charity while still receiving income for life, including covering medical expenses. They transfer assets like stocks, real estate into the trust and get an immediate tax deduction. The trust sells the assets tax-free and provides them with regular payments. Upon their passing, the remaining funds go to a charity of their choice. This strategy lets them fund their healthcare tax efficiently while supporting a cause they care about. 15. Purchasing health captives for group coverage at lower costs. Wealthy individuals who own businesses sometimes join or create health captives, which are self-funded insurance pools made up of multiple companies. Instead of paying premiums to large insurers, they collectively fund their own health insurance, reducing costs. Small and mid-sized businesses band together to create their own insurance entity. They negotiate lower costs for medical services, cutting out big insurance companies. Any unused funds stay within the captive, reducing long-term healthcare expenses. By taking control of their insurance, they customize plans, cut administrative costs, and keep more money within their network. So which strategy do you think is the smartest? Comment below. See you in the next video.